That's what they do. They assess properties, they assess wealth, and it's not for the person to say this is what something's worth. They have people who they pay to do that.
Maria, this is the latest in a long line of communist tactics from the left. And this trial should be terrifying to every single private business owner in the state of New York and the United States of America. There is no reason for this trial to exist. As Mark just pointed out, you cannot have fraud without a victim. Okay, and if you have the alleged victim standing, jumping on top of their head, saying we made a ton of money, we were not defrauded, we knew exactly what we were doing, then it gets reduced to what this is. It's a pure political confiscation of private assets in the private sector. This is a terrifying trial. Remember, it's Trump that's destroying democratic norms, democratic institutions, right? Please, like this is so scary and ridiculous. This is straight out of the Soviet Union, out of communist China, and to call it anything else is totally and completely ridiculous.
Yeah, that's why he keeps doing well, as you pointed out. You know, you look at the New York charts, of course, the big data of the morning is going to set the tone, but we've got interest rates right now pulling back. The 10-year is at 3.98%, ahead of the CPI coming out in an hour and 15 minutes. That's down 4.5 basis points, Mike. Economists are expecting prices to be up again, 0.2% month over month and 3.2% higher year over year on the CPI. New York Federal Reserve President John Williams said that interest rates are high enough to cool inflation to the central bank's goal, but I don't think anybody's expecting inflation to go to 2% anytime soon. Mike, your thoughts?
So we're in a really interesting situation right now with inflation, and so I still don't believe you can have this quote unquote soft landing and destroy inflation. And I kind of disagree with Williams and the Fed there. I think what solved a lot of the inflation problem is inflation. And if you look at the consumer at the lower end, subprime auto loan default rates are at the highest level ever, right? If you look at credit card loans outside of the top 100 banks, highest default rates ever. Okay, and you start looking at the charts of consumer debt, delinquencies on credit cards worldwide, they look like hockey sticks. So you have a meaningfully slowing economy, and you look at manufacturing, the ISM new orders has been down for 18 months but in contraction. The LEIs look like they did in 2000, 2008, and 2020. So it's a really kind of interesting situation there. That being said, over the last 150 years, Strategic Partners did a research project on what has happened with every single one of these inflation cycles. And every time it's topped 6%, it's revisited that 6% in a second wave 9 out of 10 times. And so given the government debt, the government deficit, so last year, if you take out the student loan accounting deficits or gimmicks, the deficit was $2.1 trillion. This year, tax revenue, in my opinion, is going to be down year over year because of this slowing economy, and spending hasn't been cut at all in any way, shape, or form. So with all of this government spending, I think that's what's going to create this myth of a soft landing, because that government portion of GDP is so big that it looks like we have positive year-over-year GDP growth. The flip side of that is, will that be inflationary? It was all the government spending, in my opinion, from the COVID stimulus packages that got us in the situation we are in right now.
Yeah.
So if we get some numbers that are hot this week, higher, so if we come in higher than coming in at 0.4 today and get a hot number on Friday and rates start to back off, you could then see the equity markets come unglued. Well, I don't know that we're going to see that in these numbers, though.
That's exactly the scenario that Jamie Dimon talked about this week, and he said that he thinks inflation is going to bounce around 3%, even go higher than that. Here,
Maria, this Bitcoin, what's going on with Bitcoin and the inflation argument are inextricably linked, because it's the total destruction of the purchasing power of the United States dollar by the endless money printing is why Bitcoin is rallying. First, it was Silicon Valley Bank when they said they would bail out every single bank under the sun. Now we have the ETF approval, opening the floodgates to trillions of dollars of assets to flood in. So they're very inextricably linked, in my opinion, so it was great to bring that up.
Great point. All right, we appreciate it. Thank you so much, Mario Veneroso. Good night.
Yeah, I'd say both of them have ruined their political futures, particularly Ron DeSantis. Had Ron DeSantis stood out and not participated in this exercise, he would have been the clear front runner going in the next election. Nikki Haley will never get the MAGA vote. She will, and that, in a sense, disqualifies her from ever holding any position of significance. That's about 75 to 80% of the Republican Party. So they're both done. What I would say is, so Chris Christie said it, 68 million by Nikki Haley on TV, 59 million by Ron DeSantis. Okay, had that money been spent on voter drives, get out the vote efforts by the Republican Party or by the donors in places like Michigan, Pennsylvania, Wisconsin, you're looking at a Republican domination of not only the White House, the Senate, because when you look at Donald Trump amongst unregistered voters, he's beating Joe Biden by 20 points, okay, which historically has been the opposite for the Democrat. And so instead of focusing on actually winning elections, the apparatus of the Republican Party is focused on paying off consultants, appeasing the donor class who are behind Nikki Haley because she's pliable, right? She will do their bidding where Donald Trump will do the bidding of his actual supporters.
You're upset with Republicans.
Well, the Republican establishment is doing everything they can to work against the actual voter because of the general disdain. Where the Democrats, their donors and their politicians, it's very much aligned.
There's a lot of truth there that you just said. All right, let's take a break. When we come back, Hunter Biden causing chaos on Capitol Hill yesterday.
I agree that it's a head fake, but for different reasons in that where did all this money come from? Let us not forget that Joe Biden was not in charge of building bridges and infrastructure where the normal corruption that we've come to know and love in America, it's like, yeah, the contractor that's building the highway can also put an extension on my house and a pool. No, this is foreign policy. Joe Biden was selling out our country's interests for the personal enrichment of his family, and Hunter Biden was merely the bagman. And so had Hunter not have these horrific drug problems, you might be able to believe that he's a really smart guy and he knows people and he's able to earn this money. The fact of the matter is he had such a debilitating crack problem that every single one of his teeth needed to be replaced.
Wow.
There is no way he was able to earn this money. And so in my opinion, what we should be focusing on here, which Jim Comer has alluded to, but they haven't quite honed in on, is treason.
Yeah.
Okay, you can't have your son be making tens of millions of dollars from a private equity fund where you have one investor, the Bank of China, controlled by the Chinese Communist Party, with no private equity experience, without trading favors.
And by the way, he may very well, right now as we speak, continuing to influence peddle and bribery. Here's James Comer with me on this program yesterday talking about Hunter Biden's sale of art, his art, and how much he's getting and who's buying his influence peddling.
They don't care. They know that there's no accountability, that the Republicans have done so little. And this stuff that's happening with Hunter Biden should have been happening a year ago. He should have been subpoenaed the day that the Republicans took control. Yeah. For whatever reason, they're just not really doing it. They're not fighting fire with fire.
No, they're not. Let's take a break. When we come back, we are just getting started this hour. Got this morning, Mike Lee, reaction.
Yeah, look, I think if we get a few more hot numbers, so we'll see what tomorrow looks like. But if we get a few more hot numbers, the entire concept that we're going to have the market predicting 6 rate cuts this year, if that dissipates and you see this 10-year start running up to 4.25, 4.5, you will see a near-term equity correction. I think the saving grace for the Fed here and what's going to give them cover is the continuing economic deterioration of those on the bottom half or the bottom 3/4 of the scale. Main Street, as Stephanie has just been referring to it, that sort of deterioration, which we're already seeing, again, used car, subprime used car auto loans, default rates, highest levels ever. So these sorts of events and that deterioration at the bottom, I think, is going to hamper a reacceleration on inflation if the government can get some sort of spending under control, which is the other X factor here.
I don't think there's any shot that we get 6 rate cuts this year, by the way. Just my opinion. This is outrageous that this is what the market is expecting. And let me tell you, if we are going to get 6 rate cuts, that means that is in response to a seriously deteriorating economic macro story. Shirley, you've got more.
Well, I was
Mike Lee, remember the Fed got political when inflation started rearing its ugly head, calling it transitory. Why was he calling it transitory so aggressively? He was wrong.
Yeah, well, look, all inflation is transitory. It's just how long is that period?
Yeah,
right?
how long is transitory? Is it 5 years? Is it a
could
year?
be 6 months. It could be a decade.
Yeah.
But when you talk about the stock market performance of last year, a lot of that is, in a sense, papered over by the performance we saw on the Magnificent Seven. And so there's some
good point. Yeah.
So some interesting concepts to think about inside of that is that the defensive stocks are no longer your Procter & Gamble, your Colgate. They are businesses like Google, like Microsoft, that have fortress balance sheets, that have better access to capital markets and have more cash than most nation states in the world. Okay, and they also have businesses that really don't get too harmed in terms of economic slowdowns. So when you look at the S&P 500 value was up 1% last year, the S&P 500 growth was up over 30%. So some interesting. So what I see from markets is if this inflation trend keeps sticking with us, and we do not get the cuts, is that you see more of that concentration where capital flows into these companies that are the most secure, that have the best business models for this economic slowdown, and then names like NVIDIA, who have been miles ahead of everyone else in a massive change in technology spend and continue to grow their revenue 3 and 4x year over year. So I see the trade not so much in a massive equity correction, but more concentration to these leaders, which makes it look like, okay, well, the S&P 500 is up 25%.
Right.
Well, is it really? It's really the S&P 7 up 30 or 40%, the S&P 493 up a few percent. And that represents capital flowing into the new defensive stocks, as I like to call them. But I think the only saving grace here for the Fed, if they want to cut rates, is, again, this deterioration at the bottom. We've been in a manufacturing recession. I think the new orders component of the ISM has been in decline for 18 straight months. The leading economic indicators, if you look at the charts of those, they look identical, like the collapse to 2000, 2008, and 2020. So this government spending, which is propping up inflation, is also giving us positive quarters of GDP growth, where in reality we have this recession underneath. So a really challenging time to just put a label on it, other than for certain people this economy is booming. For everyone else, it is pretty darn ugly.
Yeah, it's a great point, and I'm glad you made it. So at least I know now that the bears, including you, Stephanie, are going to go run out and go buy these new Bitcoin ETFs, right? You're not expecting back to euphoria. Hey, Doug Holtz-Aiken, how are we going to get out of this?